Good morning.
Morning, James.
Good to talk to you. So thanks very much for doing this. As I say, it's an interesting fund, and I think we all want to learn a bit more about it. So if you've got some slides, so why don't we sort of just rattle through those to start off with, and then we can ask some questions if that's all right.
Yeah, brilliant. So I'll just introduce myself very briefly. I'm Rob Guest. I'm an investment director at Foresight, and I'm the co-head and co-founder of Foresight Sustainable Forestry PLC. I've been with the business for 7 years, and I've been working in the sustainable investment industry for more than 12 years and in finance for more than 15. So look, in terms of Foresight, we are a 8.4 billion sterling LSE listed investment manager and asset manager. HQ is in the UK. We've got offices in Rome and Australia and lots of offices across the UK. Of our AUM, about 80% of that is in sustainable real assets, so mainly renewable energy generation and energy transition assets, but also real estate, so and forestry as well. The other 20% is small cap, private equity and venture capital. So for Foresight, sustainable land and sustainable foods are key investment themes for us. So these are global challenges. They need vast amounts of capital. We've been decarbonising our energy supply and looking at energy transition and decarbonising transport and heating. We're doing well on that, but land and food, there's a lot of work to do. So these are key areas for Foresight as a business, and we've been looking at those sectors very intensively for about 4 years now. Amongst those land and food themes, we selected commercial forestry as a really good entry point into the natural capital and land sector. We think it's a great way to bring some of our investors and clients into that space. And I'll tell you a bit more about why we've selected it in a moment. In terms of our track record in forestry, we've carried out more than 40 transactions worth upwards of £140 million. And we've done those deals over the last 2 to 3 years. In November 2021, we launched Foresight Sustainable Forestry Company PLC. This is main market premium segment of the London Stock Exchange, and we're the first natural capital investment trust. So we are an investment company trading for tax purposes as an investment trust, and we're the first one into this sector to be in that listed format. We raised £130 million. And since IPO, we've been busy transacting. So we built up a portfolio of seed assets prior to IPO, which we've been successfully able to acquire £113 million of recently in March. And we've done 2 follow-on transactions to buy afforestation sites. So we're now 91% deployed and looking forward to the next steps. So in terms of our ambitions and goals for the investment company, we'd like to grow the funds to £500 million within 4 to 5 years of IPO. And our target is to deliver for our investors CPI plus 5% net total returns. Our returns target is over a 5-year rolling basis. I think reflecting the asset classes, medium to long-term investment. Forestry is best thought of as a medium to long-term investment, but actually we are providing liquidity in that space, which is not something that has been available in the UK market before, with a UK focused vehicle. So in terms of the £500 million, our run rate of deployment is about £75 to £80 million to date. We think probably £100 million per annum in the UK market is sensible. The UK market's not enormous, so we think £100 million per annum of growth and in terms of pipeline that Foresight can deliver as a sensible target. But we'd like to get this vehicle to scale as rapidly as we can and then keep growing it. So in terms of the allocation of the capital, we're looking to acquire 50% forestry assets, so mature forests of different ages that will yield and be harvested for thinned and or harvested to take timber over a period of time. So we have a sort of different maturities within that established forest part of the portfolio, which gives the fund vital cash flow. But in terms of the value creation opportunity that we've identified in this space, it is probably, in terms of total returns, we see really good opportunity in the afforestation space. So what do I mean by afforestation? That's taking bare ground and getting consents and grants and carbon unit accreditations in place, and then developing that land into new forests and new woodlands. So we see that development value. So we've got half of the portfolio that gives a nice cash flow, and the other half broadly is giving you that development upside. We're creating value by successfully developing new forest projects, and that gives a nice risk-adjusted return balance. We won't use structural leverage or debt other than a revolving credit facility, which is a common tool used by lots of investment trusts in between equity raises. But otherwise, there won't be any medium or long-term structural debt in these portfolios. We don't think that's suitable for our business plan. So in terms of our other target, we genuinely believe in supplying timber into the UK. So one of our goals is to increase the supply of sustainable timber to the UK. We think of ourselves as a progressive forestry participant. The forestry industry has some reputation, I think, from the 60s, 70s and 80s and the way forestry was done. That's not what we're doing here. We're trying to bring a sustainable approach to forestry and to UK timber production. We'd like to make a material contribution to the climate change battle. We can talk more about that, but also social and GDP benefits that come from this asset class. Biodiversity net gain and provision of ecosystem services are things that we can do whilst carrying out our commercial, largely commercial forestry operations. Next slide, thank you. So in terms of why now and why forestry, I mean, the main reason for now is that the climate change and biodiversity battles are happening now. You know, now's the time where our biodiversity levels are at their lowest ebbs, and whilst the climate change temperature control needs to happen. So we need to act now, and this fund really does participate in that. Why forestry and why this asset class? You know, there's a tight supply of timber in globally. So the World Bank's estimating 1 billion cubic meters per annum of supply deficit every year by 2050. So there's huge demand for sustainable timber products and a tight supply globally, and that's compounded in the UK. So we're only 13% forested. We can see our harvesting program in the UK, and it's a certainty that there will not be enough timber, and that our timber supply over the next 10, 15 years is actually going to drop off. We're importing about 80% of our timber at the moment, and our stocks are depleted. And so actually this fund is looking to sell its timber into that market, but also plant new forests. Key point is it takes 30 to 35 up to 40 years for our commercial trees to reach maturity. In other geographies, it can take 25 years. In the Nordics, it can take 60 years for commercial trees to reach maturity. So we can plant trillions of trees, billions of trees this year, but they won't be ready for decades. And that's a really important element of this investment trust. We're looking to sell our timber into a really strong market that has upwards pressure on it for timber prices. We're buying UK freeholds, and we're buying UK stocks of timber. These have performed exceptionally well historically in inflationary environments and showed resilience to financial shocks and market shocks. You've got 3 to 4% biological growth of those trees every year, regardless of what's going on in financial markets. And so you get a really strong inflation protection, and a real return has been delivered by forestry and UK land freeholds over long periods of time. So timing for that is, with inflation running high, we think this is an interesting asset class for people to consider in particular right now. In terms of the analysis we've run, there are low or inverse correlations to other asset classes, so bonds, equities, renewable energy. The correlations are low. So if you're looking for an ESG and sustainability high scoring ESG investment in the alternative sector that diversifies your allocation, then FSF could be a good one to think about. There's some changes going on in the UK. You know, after Brexit, the basic payment schemes are being pulled away for farming and replaced with ELMs and other environmental-based payments. So there's a huge shift in the countryside, and land use change is something that government is grappling with. How do we come out of Europe? How do we correct our subsidized farming, and how do we get back into productive land use again? And that creates an opportunity for us to buy land and be part of that land use change. There's a government target to plant 30,000 hectares, an area the size of Birmingham, by 2030, and that equates to up to 2050 about 900,000 hectares, so about 4% of UK land that the government would like us to afforest with forest and woodland areas. And so, you know, this trust is playing its part in helping the government to hit that target. Final point around kind of why now: voluntary carbon and biodiversity markets. These carbon units and probably biodiversity units are just areas that are starting to take off, and Foresight, our house view, is that these units could peak in value between 2030 and 2040. So this trust is very well positioned to generate lots of additional units and then to maximize value for them in the future. Next slide. Thank you. Okay, so the size of the UK market is about £20 billion. The UK forestry market, we see about £300 million of transactions per annum, and that 900,000 hectares, 30,000 hectares per annum target, that represents about a 28% increase in the size of the afforestation in the UK. So the key point here is that the market is going to grow. We're buying and participating in a growing market, and as a buyer of land, that's a good place to be. Of the existing forestry, about half of it's commercial and half of it's non-commercial, so broadleaf trees, native broadleaf trees, and the commercial trees for timber supply. About a third of it's held in public hands, so government owned, and the other 2/3 is in private ownership. So in terms of our portfolio, we have 29 assets within FSF. You can see there the split between Scotland, Wales, and England. We think we're seeing more and more in Wales, and England, I think, has more stringent permitting rules, but actually that could be Northern England, some targets for afforestation up there. But predominantly Scotland, it's about 8,500 hectares, and currently by value, just a bit over a third of that is afforestation, and our target is to bring that afforestation percentage 40 to 50% by value is where we'd like to be. We started off with mature forestry, focusing on that cash flow, which is helpful for the fund. We've got a mixture of age classes, and we're looking for forests with different attributes. So timber production is the key thing, but carbon opportunities and biodiversity, net gain creation opportunities, and social impact, these are all things that we're looking to achieve, and we have that within the portfolio. We've got a landscape scale estate that we're working on. We've got some small timber productive timber afforestation sites, so it's a mixed bag within the portfolio. In terms of pipeline, we've got a direct origination campaign to originate bilateral deals, so we've been screening and mapped the whole of the UK. And so we've mapped Scotland, Northern England, and Wales, and we've identified more than 4,500 suitable sites for afforestation. Value of those is circa 10 to 15 billion, in terms of buying the land, and then also the capex required to develop that. So we've got a big pipeline of opportunities, and we're doing deals on a private sale basis. So we're procuring these opportunities and doing deals with people on a one-on-one basis, which is very valuable for the trust. Importantly, FSF has priority access. So that intellectual property is owned by Foresight. That's our campaign, and it's our mapping exercise of how we identify the freeholds and approach the vendors. But importantly, FSF has the first priority over that pipeline, which gives it, puts it in a very strong position. So in terms of sustainability and ESG, we are primarily a sustainable timber fund. And I think that's important. We believe at Foresight, we believe in the sustainability of timber. We import 80% per annum in the UK, as I said, and increasing our home supply will reduce the pressure in the supply chain globally on natural and semi-natural forests. So only about a third of the world's timber is supplied from commercial forests. That means the other 2/3 is coming from natural and semi-natural forests. So we believe as a sustainable manager that planting more commercial trees and having sawlog generated to put into our houses rather than importing that from elsewhere and putting pressure on natural forests is a very sustainable thing to do. Timber is a low carbon building material. And cement and steel are intensive. So again, there's some environmental credentials for timber. It's a very good product. It's a very good thing to be building with. The byproducts of timber, as long as the waste hierarchy is followed, again, we think that's a very sustainable, long-term, regenerative and renewable product that we can utilize. So that's the kind of cornerstone, the timber element of this. But then when we're planting new trees, we are sequestering additional carbon out of the atmosphere. So our target for the fund over the long term is to sequester 4 million tonnes of carbon. So that's about a year's worth of City of Edinburgh's carbon footprint. So a material impact we can make by planting these new trees that will sequester carbon out of the atmosphere, and we can create carbon units from that. There's lots of things I've listed there about natural capital services, so ecosystem services, flood protection, social engagement, education. These forests can deliver all of those things, and those are areas that Foresight is actively working on within the portfolio. We're collecting data and baselining our forests and working out what their baseline status is and what their potential is to deliver in some of these natural capital services. So that'll be a big thing in our reports every year. We try and show shareholders what other things are going on other than the sustainable timber production, which is the kind of the beating heart of the trust. I won't list off all of those things on the bottom 2 bullet points there, just in the interest of time. But Article 9 SFDR, PSC, FSC, forestry certifications, the taxonomy, the SDGs. These are all things that investors are interested in. Foresight is managing that on investors' behalf, and around that we're wrapping our sustainable evaluation tool. And as I said, setting baseline for each forest, working out what the potential for each forest is, and then over time trying to make sure that each forest is contributing positively to ESG and sustainability ends. Next slide, please. So in terms of the markets, I talked about how it takes decades for trees to mature and the huge demand as people on the planet urbanize and suburbanize. So we're selling timber into that market. In terms of carbon, at the end of last year, there were 37, I think that's a typo, 37 trillion of global net zero commitments, and 700 UK corporates have made net zero commitments. McKinsey and Trove Research are estimating a 100-fold demand increase for voluntary carbon by 2050. So our portfolio will be creating, when we're sequestering this carbon, we'll be creating voluntary carbon units, and we will be able to monetize those and also create large impact hit, which is important. So that market in terms of tight supply and high demand is very exciting for investors here. Natural capital, biodiversity, all of those things it's an emerging market there. People are working out how to use accounting principles linked with science-based targets to work out how you quantify the natural capital premium. We're looking into that at the moment, and those are sort of areas that I guess it's upside, it's pure upside for this fund, but it could be a really exciting area in the future. And we see lots of demand from investors in that space, and lots of demand for potentially for biodiversity units and social impact units as well, which could be something else that we can add as another income stream in the future. We're procuring those freeholds, and that land supply is important for this trust. At the moment, we're able to buy a steady stream of farmland, which we can convert into forests. It's going well, and there's lots of opportunity, and it's a big market, and there's a big land use change. So we see a thick pipeline coming in. I think lease and maybe joint venture models might be the next steps in the future in the market, but at the moment, it's a freehold-based model. Next slide, please, James. So look, just to wrap up, we're operating in markets where there's a tight supply and then high demand, which positions the fund well in its core revenue streams. We're offering liquid access to risk-adjusted returns, and we're giving from a balanced yet also diverse portfolio of afforestation and forestry assets. We've got a progressive approach to forestry and to productive land use when you combine that with carbon sequestration, the biodiversity elements, the social elements. We're 91% deployed, having done our seed assets deal and recent deals. We've got a really good pipeline, and we've got our main market listing, and we're looking to the future to use this listed platform that we've got to grow in the near future. So that's it from me. Thank you very much, and yeah, happy to take some questions.
Great, thank you very much. Okay, so start off with then. So, who are you buying the land from? Is it sort of typically farmers or other sorts of landowners?
Yeah, so it's a mixture of people, but yes, the majority of the acquisitions we've made have been people who've been farming. It's mainly marginal grazing ground and marginal pasture ground, and predominantly it's farmers who are, I think, a little bit disillusioned and concerned about the future, with basic payment schemes being ramped down, and then this European, this UK model where subsidies, it's not clear yet what's replacing the basic payment scheme, and we're seeing a lot of opportunity for people who would like to sell the land and take a lump sum and use that as their pension. We have acquired from some high net worth individuals, particularly when you go up to the larger sites. I mentioned we bought a Highland estate, which is very much a kind of natural capital project. It does have great timber in it, but it's got a great natural capital focus. That's a big piece of land. It's 2,000 hectares, and that was an ultra high net worth individual. So it's a mixture really, but it's mainly private landowners, individual landowners for the afforestation land. For the mature forests, we've bought from various different funds and forestry participants. So it's a mixture of sellers.
Okay, thank you. And then in terms of sort of planting trees, do you get any grants to plant the trees?
Yeah, that's right. So when we buy a piece of land and put forward for planting, it depends where you are in the country, but broadly speaking, you might get a grant for, say, your cost of development, your capex to establish your forest might be £5,000 a hectare, and broad brush, but you might get grants for, say, £4,000 a hectare. So something like 80% of the capex is grant funded, which is obviously very helpful. You do have to, until the grants come in, so they're not instantaneous. So you have to front the capex, and then over a period of about 3 years, you get your grant funding to help come in to offset that.
And I know farmers get paid for promoting biodiversity. Can you get that as well?
Yeah, absolutely. I mean, we can do it in terms of there's the environmental land management scheme is coming in, ELMS and basic payments and farm payments. I think once you convert to forestry and you take the grants, you know, there is a period of transition where you can take some farming payments as you take say a sheep farm out of production and put it into a forest. There can be some overlap between the basic farm payment coming in and the grant payment, but once you've established it as a forest, then you transition on. Obviously, the grant scheme area is a red line area. That's what Scottish Forestry or Natural Resources Wales are interested in. That's what they're grant funding. There's no reason why you couldn't have a forest area here, which is a grant scheme area, with an adjacent piece of farmland. For example, on the estate that we run in the portfolio, there will be parts of that estate that might be taking environmental payments and run. So but those are quite rare. Primarily speaking, once you've created your forest, you're into the kind of forestry regime and you're into that grant payment. You do get grants for restocking. So when you harvest, you get a small rebate to help you to cover the cost of restocking the forest. It's nothing like the kind of establishment grant, but it does help. Thanks.
So I know there's been some opposition in some places to planting trees on farmland. Is that something that you foresee as a problem going forward?
Yeah, I mean, I think it's controversial. You know, land use change and particularly in the countryside. You know, change in the countryside is challenging, and I think governments need to set the strategy. They've set the strategy to have 4% of UK land converted to forest and woodland. And just to give you a feel for that, you know, about 40% of the UK is covered with marginal kind of grazing land and pasture ground. So we're talking about taking about 10% out of grazing and marginal land of that land. It's not land that can be used for planting arable on. It's not, you know, it's not kind of high grade food production. It's that kind of middle of the hill. It's not the top of the hill. It's not the right place to put trees because they only give you wood chip. It's that middle of the hill that will give you productive sawlog. And I think, you know, food is important in the UK. Of course it is. And we need to become more self-sufficient in food. But we're also importing 80% of our timber into the country at the moment. And so I think if you're growing your sawlog trees, base trees in the right place, you know, it's also important that we offset our you know, become more self-sufficient in timber production so we can use our own timber to build our houses. And so I think that's what we think message that we'd like to get across is that, you know, timber production should be up there with food production as an important agenda item. But as I said, you know, if you change things in the countryside, you need to go about it in the right way. You need to do it in line with government targets and do it in line with the regulations. And we do everything by the book. I think the key observation that we have is that communication and consultation with communities is extremely important for successful development. Foresight's got a lot of experience of greenfield project development in solar, in wind, and in biomass as well. We've done a lot of that, and going through those consultation processes and listening to people's feedback, engaging with governments and local authorities, and making sure that people are comfortable with what you're doing. But I think there is a inherent concern in the countryside that, you know, private equity coming into farming is potentially worrying. And I think we just have to build people's trust, act honorably, consult and communicate clearly, and then show what our schemes are doing in our ESG and sustainability reports, and build that trust with people that Foresight Sustainable Forestry is one of the players who's driving positive land use change in the countryside, and that we're not just there for the carbon credits. We're there to create timber, to create jobs, to contribute to the community. And as benefits of that, we're also sequestering more carbon and creating additional biodiversity, which we can show to people in the data that we're collecting.
What's the kind of typical species mix in a wood?
Yeah, good question. So in UKFS, so UK forestry standards, the requirements are that you need to have 10% open ground as a minimum. You need to have 10% native broadleaf as a minimum, and the rest can be commercially focused. Sitka spruce, and the spruce species is obviously the predominant way that we create sawlog for building in Europe, and in the UK is no different. So a reasonable portion of that will be spruce. But if you buy slightly better ground, you can put Douglas fir, pine, western red cedar, other productive conifers can go into the mix. And so you end up with a mixed productive area. But that's UKFS, so that's the sort of minimum bar across the UK. But in Wales, the grant scheme, they've got a really progressive grant scheme that incentivizes doing 25% of your planted area should be native broadleaf if you want to capture that grant. You know, we're a big fan of that. It means that you're doing 75% commercial, 25% native broadleaf. In one of our schemes, we're doing 50-50. You know, it's a lovely piece of ground. It's a lovely area. We think it's the right thing to do. We've bought the land at a price that allows us to do that. And so we're doing 50% commercial and we're doing 50%. So it's mixed. Some of our schemes are a little timber production focus, and then others are more the natural capital focus, where we're looking at slightly rewilding-esque type things around the timber production. So it's really just about looking at the land and working out what the right blend is and what the focus is for that particular asset. And that's our goal, is to make sure that whatever we're doing, it is a sort of sustainable use for that land. So hopefully that answers the question.
Great, thank you. In terms of the demand for timber, where's that coming from? Is it mostly construction? Will you actually sell anything to biomass plants?
Yeah, so I mean, of our portfolio, you know, a good forest will have 80% sawlog in it, or 85% sawlog if it's exceptional, and that's going into, you know, buildings and construction. A very poor forest might be as low as 40% sawlog, which means the rest is going into, you know, fencing, pallet, and chip. I think, you know, our average is above 2/3. So, you know, I guess we're about 65 to 75%. That's kind of the forest that that's our average. Our best forests are 85% sawlog, which means that I think we're buying forests that we see have longevity because they follow that waste hierarchy principle. We're doing it for the sawlog. That goes into a building and that locks up the carbon for, say, 100 years until that building's replenished. The other, you know, call it 30%, 35% of the biomass, you know, it's byproduct. It's going into fencing. It's going into pallets that are used for transport. And about, you know, in terms of our forests and our average, about 10% is probably going, of the wood chips, of the tree in total, is going into biomass energy production directly. When you're doing your milling process to create sawlog, pallet, and fence wood, there are offcuts. You know, there are bits that then get chipped. So about 10 to 20% of our forest is probably currently going into biomass, and that's quite a lively market at the moment. probably in time the UK will use biomass as a stepping stone renewable energy technology, and perhaps move off that, and the wood chip will be used for other sustainable purposes. But right now, as long as the waste hierarchy principle is followed and you're doing it for the sawlog, and the chip is a byproduct, Foresight's view on biomass is that is sustainable, and using that wood chip in the future for other purposes. I'm seeing people converting wood chip into nylon fabric that can replace plastic and nylon. So people are trying to find new uses for wood chip. Plastic replacement is an exciting area for the future to look at. But right now, biomass is serving a healthy market for us.
How do UK timber prices compare with overseas ones?
So our pricing is less volatile than, say, US lumber prices. If you look at sort of US indices for lumber, particularly during COVID, there was a huge spike, exceptionally large spike in demand, and lumber prices kicked up. In the UK, we did see an uplift, but it was nothing like the extraordinary rise. So the volatility levels are lower in the UK. We saw, say, a 10 to 15% increase, whilst those indexes were trebling, that sort of order of magnitude. So we are affected by global market forces. When US lumber spiking, and when supply is tight and demands increased, and when housing building projects are gunning away very well, we are exposed to that. I think what we observe as Foresight is that in the UK, because it's importing 80% every year, it has that resilience. So the UK supply is the closest to the mills. Lumber's quite bulky to put on trucks, and the handling charges of taking it on and off boats are quite material when you add them up. So if you've got double or triple handling, and then you've got some haulage for more than 50 miles. So the homegrown timber tends to perform very well, and the sawmills in the UK tend to, like to lock that into the book, into their program for the year first, and then they balance with imports. So it's it puts us in a good position as FSF. The final point is that because we're a net importer of timber, currency does affect UK timber prices. So when the pound is strong or weak, that does have a bearing on what we get for our timber. But as I said, I think because we're the kind of first port of call for those sawmills, and we've got that logistical advantage, it normally puts us in quite a sort of relatively insulated place. But it's a global market, and we accept that. And I think our mindset is, if you look at the global macroeconomic supply and demand dynamics, massive population growth and tight supply that you can do nothing about, you can't fix it for decades. So if you look at this as a sort of, intra-quarter, intra-year, I can see volatility. But if you look at this over a 3 or 5 year sort of average basis, those fundamentals do show, and that's why we've seen real terms growth in timber prices over long periods of time.
Okay, cool, that makes sense. How do you cope with things like fire and weather, and those sorts of risks? How do you cover those?
So in terms of fire, we are 100%, of the portfolio is insured against fire damage. Obviously the UK, and where we're growing our trees in particular, is relatively wet, and so that's helpful. There are dry spells, but because the temperate UK climate and the west coast and up north, it's wetter and it's damper, and that does reduce fire risk. So the premiums are, I guess, in global terms, much more reasonable for that insurance. For wind blow, we don't insure everything. And wind blow is just when a storm comes in and either blows a tree over or snaps it in two. Trees that are less than 20 years old don't really blow over or snap. Trees above 20 years do become exposed, depending on the forest and altitude, and is it near the coast, all of those things. But we have, because this is this fund is not, it's not $1 billion fund, it's not £1 billion fund. We've decided to insure everything above 20 years old across the portfolio. We don't insure 100% because you get salvage value. So when a tree blows over, you can sell elements of sawlog and wood chip. So we tend to insure a bit more between years 20 and 30, and a little bit less between years 30 and 40, because by the time it's 30 years old, it's got more salvage value. But we have put that in place since IPO to protect against that. And obviously climate change we're expecting drought, fire and storms to be more prevalent. So we're insuring quite heavily. Okay.
And then in terms of sort of income generation, how long will it be before you actually start harvesting timber? And then when you're sort of into the swing of things, what's the kind of mix of income generation, do you think?
Yeah, so when you plant a commercial tree in the UK, depending on where it is, but if it's in the right place and it's good ground, you can get some thinning revenues at, say, year 15. It's not massive amounts, and thinning is just taking some stems out of the forest, which can be sold. That opens up the forest and lets more light in, and actually the trees that are left then put on more yield. So there's an optimal balance. So some forests, you have a thinning plan, but that allows some income, like say year 15, and about between year 35 and year 40, you're then moving into the clear fell, where you're taking out compartments, and that's when you get the lion's share of the biomass comes out, and you get your revenues. But in terms of our income, we already have a mixture of forests of different ages. So some of our forests are 35 to 60 years old, and we have a harvesting plan for this year coming up. We've got somewhere between £4 and £5 million worth of timber income due to come into the trust, and there's a harvesting program over the next 10 years where we do have timber income coming in, and that's why we've built the portfolio with that 50-50 approach, which is have mature forests of different ages. It's not a consistent wall of yield. We're not a yield co. So we're not trying to fill up the perfect wall of yield, but we do have in every year for the next 10 years some income coming in to the company. But actually that income is, I guess, facilitating the development that we're doing. We have to, the other 50% of the fund is capital intensive. We're investing in those forests, putting new roads in, planting the trees until the grants come in to offset some of that capex. So in terms of the trust overall, we don't have a dividend yield target, and the prospectus is clear that this is not a yield play. It's a total return strategy, and that's where we see the best value for investors. But we do have income within the business. I guess it gets rid of some of that negative cash balance building up. So we're solvent, and if timber prices do perform strongly, we're hoping for outperformance there. But really, our first dividend is for the company. Major yield event is probably when we look to sell the carbon units, which could be 5 to 10 years out, that sort of thing. Okay. So we're looking to use our cash to unlock the development value and do as much afforestation and capture as many carbon units as we can whilst this market opportunity is there, if that makes sense.
Yeah, perfectly. Great. Thanks very much for that. I think we've run out of time. But no, it's definitely very interesting. We'll be watching how you do, and we might get you back on again in a couple of years' time or something, see how it's going. But no, thanks very much for that.
No, thank you for having me. Appreciate it.
And apologies if we didn't get to your question. I know there's a few more we didn't answer, but there's a lot to cover. We'll be back next week talking to Gary Moglioni from Momentum Multi-Asset Value. And we'll also have Andrew Mahaty on talking about what happened over the course of April. It's obviously been quite an eventful month. And then we've got the manager of Pantheon Infrastructure the following week. And they've been making a few more investments recently. So it should be interesting to see what that portfolio is looking like. It's another relatively new fund. So thanks very much for tuning in today. And we will hopefully see you next week. Thanks. Goodbye.